And when this all plays out, as I'm telling you it's going to play out, you can't say that there weren't any signs. I've developed my newest premise, and this is all going to be about what's happening all through the summer. A lot of things are going to happen this summer, and it's going to affect things like cryptocurrencies, stocks, real estate, unemployment, even the recession. Also, I want to talk to you about specific dates when some of these gold mining companies are about to spike in price. We're going to talk about that in this video. Just to clarify a few of the earlier premises I've had, I was talking about inflation. When it was going much, much higher, everybody was saying that, and everyone expected it to keep on going. That's when I told you that it was going to be coming down. I also told you when it's coming down, it's going to come down really quickly. That's exactly what happened. I was wrong about it. It didn't bounce. Rather, it landed with a thud. What's happening here is the war between the inflationary forces and the anti-inflationary forces. So a lot on both sides right now. But we are going to see much higher inflation. With those commodity prices higher, now fuel prices higher, that all feeds into and bleeds into prices you pay for things. It's going to push inflation higher. It's just some of the factors. But the real inflationary driver is another premise I had about, as the government can no longer even afford to pay the debt we've built up. The response is going to be another bout of quantitative easing. This will be quantitative easing 7 or 85 or something like that. They'll just create new money to squash a current problem, but they won't be looking longer term about how that's going to affect everything. And I told you that that will be a really strong inflationary driver, the quantitative easing. And then when they think that the problem they made is they didn't make it big enough, and they come over the top with the next round of quantitative easing, that's when we are very likely to see incredibly strong inflation. Possibly even hyperinflation, which is increases in prices of 50% per month. Not per year, it's per month. And this is all feeding into another aspect of the premise about how the U.S. debt bomb, this great American debt bomb, no debt loads have ever been larger in the history of the world. This debt bomb is going to absolutely explode. What do I mean by that? There's just no way to slow it down, no way to stop it. They're thinking maybe we'll raise taxes or cut programs. That's not even close to enough. We're well far gone. We're way beyond it. Years ago, I talked about how we're almost beyond the point of no return. We're well past the point of no return now by leagues. This is all going to have effects on every aspect of the economy, the quality of life you enjoy. This is a problem that there's no solution out of because we've gone too far. And for years, I've been harping about gold prices, and they finally are doing what I told them to do this whole time. I'm so grateful to see that, but we're not done yet. I've got to tell you some things in this video about when are these gold mining companies about to finally get some respect. I also told you that we would have a default deluge, sometimes they call it a default tsunami. And as you've seen and as I've showed you, we've already experienced a lot of that. And after it gets worse, it's going to get much worse. And related to this, then we're going to see a banking crisis in the United States of America. And there's things you can do to protect yourself in the situation. And I know that you want to help people that you care about also. Maybe one way to do that is let them know about this video. And all you have to do is click like, and that's going to show this video or share it with a lot more people. And you guys know that I always say, just wait, just wait. A lot of things that I talk about, I'm pretty early on them, but I'm also one of the people who believes that if you're early, you're still wrong. I'm too early, I'm still too wrong. So here's a few things that I think are all set up to happen now that you just have to wait a bit longer. They're starting to show signs of going exactly as I told you they were going to go. So some of these things you just need to wait for are real estate, stocks coming down from these bizarrely overvalued levels, some softening in cryptocurrencies, a major decline in the value comparatively to other currencies in the world of the US dollar, and therefore also a further deterioration against gold in the US dollar, and also that we're going to be seeing massive quantitative easing coming up within months. For all these to happen, you just need to wait a little bit longer. They're all playing out now. They're all setting up to play out even further. But now, as promised, I'm going to tell you my new premise that's going to be about this summer. Everything that's going to be happening throughout the next 6 months. So, for example, they are going to lower interest rates. They won't have a choice because the debt loads and the carrying costs on those debt loads are much too extremely expensive at these interest rate levels. That's why they're going to lower the rates. Not because they're done with hurting the economy or fighting inflation. They're just going to be giving up on that fight. And they're going to be keeping everybody happy in this election year. But the premise that I'm adding to this that's of value to you is that what most people are completely unaware of is that once the rates start to decline, the interest rates, that's usually when a recession begins. or very often it is, or the recession begins and then the rates start coming down. Either way, they're tied together. They always come together. If you look at this chart, you can see the gray areas of the recessions, and then when the interest rates come down, the recession begins. When the interest rates come down, the recession begins. This is all during this supposed great economy. So many people are going to be completely blindsided when this reality happens. They're going to have a consumer shock point where all of a sudden they realize that they've been lied to all this time, and so they've been positioned wrongly. The fact of the matter is that reality will never stop approaching. Even though they've put it off, even though they've gaslit you or told you that it's stronger than it is, you can't say the economy is strong if it's based on incredible levels of debt being taken on, if it's based on the fact that we've got this international trade imbalance. Manufacturing is showing signs of coming down. And now, in fact, even real estate is finally starting to show signs of coming down. This is a chart of the U.S. average mortgage size, 1 month chart. You can see that it's climbing. And then at the same time, here's a chart of the new home average sales price, 5-year chart. We were so early with this, just like we were with the gold premise. What you're seeing here on this chart are lower highs and lower lows. Lower highs, lower lows. That's a downtrend. It has begun now. And what happens with all this, especially considering that a house is usually the most expensive thing that someone purchases. When house prices go higher, people feel wealthier. That's a big driver for the wealth effect. And when house prices start coming down, that's going to put a squeeze on that wealth effect. And if you're seeing cryptocurrencies and stocks also, which all play into the wealth effect, all coming down right now together, that's going to be making people feel less wealthy. Therefore, they'll take different actions than they otherwise would have. For example, money will move to risk-off assets and out of risk-on assets. So things like cryptocurrencies and high-flying stocks and high-flying real estate prices, a lot of that money will move into things like treasury bills, safe investments like that, safe stocks, very low volatility stocks, precious metals, and even to cash. At the same time, things like luxury items, forget about it. They're going to be taking a big bath. And also discretionary items. People will be spending less money on discretionary items, even though they'll have to spend more because of inflation on the staples or the mandatory things that they have to buy. And of course, all of this affects businesses markedly. And here's a 5-year chart of business bankruptcies in the United States. And this is at a time when we're already living off of a lot of debt. And a lot of these bankrupt companies are laying people off, and there's a lot more people who are unemployed. That number will rise pretty quickly, pretty significantly once we get into the recession. But here's a chart of consumer spending. Now, as I show you these charts, you let me know if there's anything you notice about them. Similarities, everything pointing to one sort of outcome here. Here's a chart of the debt balance on credit cards, also at historically unique levels. Here's a chart of the debt balance on auto loans. Let's put it all together. Here's the debt balance total for American consumers. But luckily, they save up a lot of money, right? Here is a chart of the personal savings rate. Savings coming down, debt's going higher. That's just a manifestation of this economy, which is so weak. So where does this all lead to? One of the ways that it manifests or starts to show up is with auto loans. A recent study by Fitch Ratings found that more subprime borrowers were 60 days or more behind on their car payments than at any other time on record. Vehicle repossessions are up by 20.4%, according to Cox Automotive. And then this is a headline from Bloomberg. Underwater car loans signal U.S. consumers slammed by high rates. And that's also why a lot of Americans are setting their cars on fire. The value of the car does not even match how much more money they owe on it based on the monthly payments. And so a lot of them have taken to setting their cars on fire. They can't afford the payments. That's one way to deal with it, I suppose. Now, this is from Wallet Hub. This is data from January 2024. This is credit card payment losses by region. And I know I already told you inflation will bounce higher, and it still will. Just wait. But here's a chart of consumer inflation expectations. So the expectations are falling. And now I told you that the last thing to start coming down when inflation started dropping and all these things started dropping in price, lumber, for example, eggs. I told you that often the last one is food. Food inflation is finally starting to come down. Here you can see it's come down quite substantially. But when the inflation starts kicking up again over the summer, or when the Federal Reserve starts lowering rates later in the summer, that could set off the recession itself. It will also push a lot of investors towards risk-off assets from risk-on assets. Here's a chart of Bitcoin. Here's a chart of the Russell 2000. Here's a chart of the S&P 500. Here's the Dow Jones Industrial Average. Here's a chart of the NASDAQ. You can see that a lot of the strength kind of dropped off a bit recently, over recent periods. And it's down maybe 5%, and then people are saying, well, it might become a correction, 10%. Yeah, and it might go down a lot more than that. That's what the purpose of the video I showed you guys about one of the articles was, this bizarrely overvalued market. And when this all plays out, as I'm telling you it's going to play out, you can't say that there weren't any signs. And the one thing that's going on with gold, I promised you I'd tell you the dates of when some of these mining stocks are going to start popping higher. And it's soon. What happened was that I was talking about gold going to go higher back from when it was $1,400 an ounce. And I've been talking about it, people getting sick of it, but I'm saying the same thing again and again because I knew I was right. And now you're seeing that people are realizing it. They're waking up and saying, oh my goodness, gold is moving. I wonder why. And they're looking into it and they're pointing to one thing that they find. Oh, it's central bank buying. There's so many other factors too. But what hasn't happened is that the gold mining companies, which will be the biggest beneficiaries of the higher gold prices, massive beneficiaries of the higher gold prices, they've barely moved in price. They've gone up recently pretty significantly in a short window of time, but then they sort of tailed off a bit. But the point is, the profit margins are going to be through the roof. Some of these companies are making $100 to bring an ounce of gold out of the ground. And now, do the exact same thing, same process in the same location, the same cost structure, they're going to be making $500 an ounce. The profit margin quintupling. And if the profit margin quintuples, the stock should do more than quintuple. So when do investors suddenly wake up out of their obvious long-term slumber is when these gold mining companies now release their results. When the gold prices rose, it was too soon to factor into their quarterly financial results. That'll be another consumer shock point or investor shock point. For example, Thursday coming up, Newmont Mining is reporting their financial results. And then the following Wednesday, that's Barrick Gold doing the same. And all the smaller miners are doing the same. The silver miners doing the same over this period of time. It's earnings season for these companies. And this quarterly report is going to be factoring in or showing the effect of higher gold prices. And if not this one, the next one will definitely be showing that. But right now is the time. Get involved with some of these gold mining companies. In my opinion, I believe that they're going to spike in price as the investment world realizes that they're completely missing out on this massive, clearly obvious trade. Now, I'm hoping you're going to let me keep an eye on all of this for you, keep telling you about it. And that's why you click like on the video, like I asked you earlier, but also please subscribe to the channel. Let's stay connected. I'll keep telling you what is going to happen next and what to expect.